Pro, we got a ton of stuff going on this week. We got the perfect storm. We got technology stocks ready to break out. We have something really big that's important. If you're somebody who complains about always missing those big moves, right now we have a potential massive money moment. I'm going to explain. I'm going to show you the charts in just 1 second. There's something called Dow Theory, and a lot of people know Dow Theory based on 3 different trends, which we're going to point that out in a second. But there's a second part of that that dates all the way back to the Dow Jones Industrial Average and the transports, that when they were doing something very specific, massive bullish price action, if they're at breakout levels, happened at the same time. So we're setting up where we have Apple scheduled earnings this week, AMD scheduled earnings this week, and we have the FOMC announcement this week, and we have Dow Theory lining up. So we are sitting right there. And I want to walk you through the Daily Ticker newsletter today because we have a ton of stuff to cover. We had our mastermind group last week. I want to walk you through these 2 books in just a second. This is a video that you're going to want to watch more than once because we're going to break down the entire week. We're going to break down what the market's expecting from the Fed. If the Fed gives the language that the market's looking for, and the fact that we have Dow Theory unfolding right at the same moment, and Apple reporting this week, which is kind of the big dog that carries everything higher. Oh man, this is one of those moments where it's going to end up being a small loss on a trade that doesn't work out, or a monster launch into the next wave. We actually had a lot of people talking about last week about whether or not last week was a bear trap for the market, where we just kind of broke out and we're looking to pull back. Look, you have to take the trade if it sets up. And I think last week, Thursday and Friday especially, is going to end up being a perfect model for what we're going to be looking at this week, where Monday and Tuesday were kind of back and forth. Thursday and Friday, the bulls picked up and just took off. So I can't wait to show you this because it's kind of exciting. Hey, JB, good morning. How's it going? So I want to first show you the chart, and then we're going to come right back because it's kind of really important. So this is the chart that we're actually going to be talking about in just 1 second. But first, we need to make sure that we cover this right here. Obviously, everything we talk about here today is for educational purposes. It's up to you to make that final decision. Boy, I'm excited to help you make some good decisions today. We're actually going to start out with talking about Dow Theory. And I just want to hop on in to what this looks at. Now, most of the time when you're talking about Dow Theory, most of that conversation centers around 3 different trends. So if you're not familiar with what Dow Theory is and how it matters for right now and this week, we're actually in a new week right now, May 1st, just unfolding. Earnings alone should be a pretty good catalyst. And obviously AMD, which kind of carried the stock market for the beginning of 2023, kind of gave it that big launch. And NVIDIA kind of took off after that. Those 2 stocks and the semiconductor group launched 2023 into what you might call a mini bull market for the beginning of this year, taking over for industrial stocks, which ended 2022. So we've really kind of been in a 8-month bull rally if you are good at recognizing sector rotation and how money and order flow works its way in and out of those sectors. Ending last year was industrial, starting this year was technology, and you're going to see that we kind of shifted over into healthcare. I'm going to give you the full breakdown. But here's the thing that I want to talk about, because we're going to go over sector rotation, industry groups, the whole 9 yards. But I want to talk about Dow Theory because one of the things that's kind of one of my favorite quotes, and you're actually going to see this in the Daily Ticker, is that I'd rather be prepared for an opportunity that never comes than not prepared when it does come. So I want to walk you through this. We're going to first talk about Dow Theory. Most people know Dow Theory as 3 major trends, and you probably know that already, but you might not know is Dow Theory by having those key moving averages on your charts. Dow Theory is a longer-term trend, intermediate-term trend, and the short-term trend. The short-term trend is usually measured by the 20-period moving average. Intermediate-term trend, which is more for swing traders, is usually the 50-period moving average. Long-term trend, everybody knows that 200-period moving average on the daily chart, right? So you didn't even know it, but you were using Dow Theory on your charts just because that's what everybody looks at, and that's why everybody's looking at it. However, the big thing that I want to talk about right now is this chart. And I really want to kind of break this down. You can see what the Dow is doing. You can see what the S&P 500 is doing, and you can see the NASDAQ, which has been super strong for the whole year, right? So what does that mean? The second part of Dow Theory that not many people talk about is a very special money moment in the stock market, where back in the day when Dow Theory first came out, it was the transportation index and the Dow Jones Industrial. And essentially it said that when the major indices are doing the same thing, we call that confirmation, and you get all of the money doing everybody's looking at the same side of the market, and they're all kind of like one tsunami of opinion backed by real money. That's called confirmation. Divergence is when you might have one of them breaking out and the other one's not. So if you could think about like kind of a tug of war, where is everybody on the same side of the rope, or are we pulling against each other? And maybe you can make some movement, but you're not going to follow through. That's known as divergence. Divergence means it's not perfect. But right now, we have the FOMC announcement, right? So in case you're not aware of what's going on right now, obviously, this is the big deal, right? Obviously, we have the Fed coming out. This is what the big thing is right here, right? 10th consecutive time. That's not shocking anybody. This right here is what makes it so interesting right now. If the Fed comes out with language that the market likes, and we have Apple this week, and we have AMD, which I'm going to show you in a second, and we have Dow Theory at the same time, where the NASDAQ is at a breakout level, the S&P 500 is at a breakout level, and the Dow is at a breakout level. All of those perfectly mixed into the equation. This could make a massive bullish rally this week and going into the next quarter. Again, I want to first walk you through. Okay, I want to give you a heads up, and I want to walk you through how we actually outlined this in the newsletter this morning. Okay, and by the way, if you want to trade together, our boot camp starts this week. You can actually click the link below in the description and get it. Actually starts today. So these are the moments that make a difference. All right, now here's the big deal, and we hear this all the time with new members coming into our community. Tired of complaining you miss all the big moves? Well, here it is. Here's your wake-up call. We have a perfect storm of price action unfolding this week as the three major indices offer up a 100-year-old trading setup that moves the markets in a big way. Dow Theory states that when the major indices confirm each other, we have something called confirmation. And again, I purposely put this chart in here for you so you can grab it. This means all of the big money in the market is seeing and doing the same thing, backed by real money. No conflict, no half commitments. A big move is coming. The Dow, the NASDAQ, and the S&P 500 are all finally near breakout levels at the same time. This is the most important part here. Throw in Apple scheduled earnings, the FOMC announcement, and we have the potential for a monster bullish week. Now, here's probably the part that everybody just misses, all right? Let me turn off my phone here. Sorry about that. All right. Is this guaranteed to happen? No, but here's the thing. What if history repeats itself and it does happen? Will you make the big bucks because you were prepared, or will you wallow in a pity party once again, complaining about not getting any breaks? Winners make things happen. Losers make excuses. So what's it going to be for you this week? Me, I'd rather be prepared for an opportunity that never comes than not prepared when one does. So let's just really talk about this and let's get real. All trading is about probabilities. Our job, your job, my job is setting up and stacking the reasons that we believe that our profit target is going to get hit versus our stop loss. This is what real trading is all about. Put aside all the, perfect scenarios and where everybody wants a guarantee and all that garbage. This is a moment in time where you need to be prepared. We talk about this all the time, where you might have made $1,000 on a particular day, or maybe you made $5,000 for a particular week, and you're proud of yourself. But what if twice as much was available and you just simply didn't recognize it? Now, again, trading is about probabilities. It's not about what's definitely going to happen, but our job is to put all of that information together up to the point of the trade, and then if it unfolds in the perfect manner in the way which we mapped it out, you got to be prepared. You got to be prepared to step up, maybe a little more share size, maybe hold it a little bit longer, maybe let that stock breathe a little bit more because a bigger move is on the table. That's the setup. If we get the breakout, and I want to show you like a couple of the big breakouts that we're obviously talking about right now, which is what we kind of led off with, which is the Apple and AMD. So if we kind of sit over here with Apple, and we take a look at the breakout in Apple, it's already broke out. Look at the really clean higher lows, higher highs. A little bit of minor resistance here, but Apple's not that far from all-time highs. Take a look at AMD right now and the recent history of AMD. Big move, pullback, simple break, boom, simple break, boom. And look at where we are right now heading into this week with AMD earnings coming out this week. I'm going to tell you this right now, and there's really no other way to put this, okay? Traders that are successful build arguments like this and take the trade without hesitation because it's the right thing to do. Those traders that are struggling and never get to the other side of consistent profitability just have not built into themselves the right habits that take the trade as soon as you see unfolding the way your game plan, the way your edge has it mapped out, okay? Those that will be prepared, and I'm kind of giving you a heads up and a warning right now that this could be a really volatile, bullish week, should and could, if we get the follow through, have a monster week. This week could make your entire quarter and maybe even the next couple of weeks. That's the positive side of this trade, okay? Now, again, we live in reality, right? We live in reality. That's the way it's setting up right now. And I'm about to break down sector rotation and go through all the stocks in the sectors and the industry groups that I'm looking at heading into this week and why. I'm going to show you order flow stacking. I'm going to talk about reading the tape. If all of these plans line up and we do not see follow through, maybe Apple disappoints, maybe AMD, something happens, maybe the Fed doesn't give us what we want, that's okay too. Give yourself permission to put on great ideas, and if they follow through, fantastic. If they follow through for a day or two and don't keep going, then be an adult. Be somebody in charge of your trading account. Be like, okay, great. Good idea. Didn't follow through. So for everybody that likes to post in the comments, you were wrong. And that trading is about, this is all the information. And if it follows through, fantastic. I'm going to get paid, which is this book. If you've never read this book, Study and Tape Reading by Richard Wyckoff, read this book. A lot of what we talk about is based on Dow Theory, but also tape reading. Tape reading is us building the argument for whether or not the odds of follow through are strong. For some reason recently, we've had a lot of people reaching out to us and asking us to teach level 2, which level 2 in time and sales, which is reading every bid, offer, and every print that happens in there. And that is what old school tape reading is. Reading time and sales and reading level 2 and reading the prints to determine whether or not there's buying or selling pressure in that moment. I don't teach time and sales because it takes a long time to learn with the way that there's so much electronic trading. However, what I do teach is tape reading on the charts with price action and volume and sector rotation and industry groups and putting that all together to make a decision with the market internals. So I want to walk you over now, just a quick move into sector rotation and the markets. So first thing we want to take a look at is the last 2 weeks of price action. Depending on how you traded the last 2 weeks, you have to put that in the context of what's happened over the last 4 weeks. It's one of the biggest things that we talk about in our community, and I refuse to let up on this. You get people that are like, I should have done better, and sometimes that is the case. But the last 2 weeks, the market has kind of been back and forth. We're kind of wrestling right at this breakout level. This could be the moment where we finally take off, and if the market gives us all of these signs and we do get follow through, this could be a week where you got to level up and you can't make a little when there's a lot on the table. That's the first part. Sector rotation heading into this week is kind of neutral. But what we want to work our way over to is some of the metrics that we track on a regular basis. So if we kind of zoom out a little bit over here and we take a look at the advanced decline line, monster days heading into the end of last week. High-low difference, not quite there, but look at this. This is one of the proprietary stats that we run that make a monster, that add to your conviction level. See this 20-day high and low difference here? This is not just 20-day highs and lows. I want to explain why it's important to qualify the criteria, qualify the metrics that you're leaning on. A lot of softwares run 20-day breakouts, 50-day breakouts, and those kind of things, right? That statistic where, again, I want to show it to you just one more time. This one right here. This one right here is showing not only 20-day breakouts, which obviously is showing that there's buying pressure in the market. There's real commitments pushing things through. This is 20-day breakouts that also closed positive, also closed above the opening price, and also did at least 3/4 of its normal daily volume. So there's 4 criteria in that metric. So if you've been looking for a short sale in this market and you're looking for the market to go down, instead of paying attention to these nice, beautiful pushes and pauses to the upside, you're guessing and you're predicting. You're not just paying attention to the price action, which is what separates those who are consistently profitable from those who are worried about what's going to happen 3 months from now. Good trading is about what's going on right now and how do I interact with that right now. Predicting is really not going to get you to where you want to be, because that's not focusing on the present moment, which is the volume right now, the sector rotation right now, the price action right now, and ultimately industry group rotation. So if you want to make your trading a lot easier, I didn't say simple, but a lot easier, is you have to get to the point where you have, this is exactly how I know what's going on right now. The only last piece of that puzzle that you have is, where are you compared to the optimal entry? That's a big part of it. If you're about to hit that buy button, are you buying too late, even if you're on the right side of the trade? And I want to show you one stock that meets that criteria right now, and probably one of the stocks that you might not be watching recently, but Starbucks. Starbucks actually had this monster move to the upside heading into earnings this week as well, which actually, this brings up another thing as well. Look at these beautiful bullish gap, bullish gap, bullish gap, pause. Bullish gap, bullish gap, bullish, almost a bullish gap, definitely a bullish gap, a pause, and another move. I want to just say this to everybody that is maybe underachieving, maybe not reaching what you believe is available inside of you. You know that there's more inside of you in the markets. Sometimes you don't necessarily need to be trading the stocks that are in the news every day that are the most volatile. You need to be trading the stocks that are in play for that moment, and they aren't always Tesla. I know everybody's got this fascination with Tesla. I love trading Tesla too, but I'm really more concerned with getting paid. And getting paid means that you're trading the stocks in the sectors that are following the market, and then you break that sector down into industry groups that have the best stocks. Starbucks is not the most exciting stock in the world. However, if you are paying attention to what we're talking about on a week in and week out basis, everything is about sector rotation and which stocks are following through now. We've been talking about the residential construction stocks. Have you gotten any of those? No, because they're probably a little too boring for you, but they've been taking off for the better part of the last 3 months. We've been talking about these kinds of stocks: Starbucks, McDonald's, Yum. Have you been watching those? Let's take a look. Again, I just want to kind of like wake you up a little bit where you can actually see what's going on. So you got Starbucks, we have Yum, and probably one of the stronger ones for a while now is McDonald's. We have residential construction. Have you been paying attention to these breakouts right now? This is where you are going to separate yourself from somebody who's trading for excitement for somebody who's trading to get paid. You might be saying, well, those stocks aren't volatile enough. Well, what's more important, their inherent volatility and how exciting they are to trade, or whether or not there's a good chance they're going to follow through and you're going to get paid? And I got news for you also. Even in a stock that's not volatile, if it's obvious, you can always up your share size a little bit, and those stocks become a lot more volatile as you increase your position size. So we should mostly be focused on, where is order flow and institutional attention on a day-by-day, week-by-week, and month-by-month rotation. And that's where our attention should be, because those hedge funds have billions of dollars and a lot of research. And when we start to understand how to track the order flow in and out of those sectors, trading at that point is really now just following the smart money footprints and learning two things: how to time your way into those trades better, and then ultimately how to hold your winning trades longer. Now, that second part is something you want to make a habit, which is something that we talked about last week as well. If you've never bought this book or read this book, Atomic Habits, in our mastermind group last week, we probably spent a good hour just talking about Atomic Habits and how that applies holding your winning trades longer. I think all of us know, boom, kick out your losses, right? Your number one goal after you have an edge, after you start to follow it, and after you end up having good discipline on your losing trades, you need to then take that same discipline you have on losing trades and move that over to your profitable trades and have a structure for holding the big winners longer. I hope you can tell how psyched I am for trading this week. There's a lot on the table this week. So what I want to do now is I want to break through. I want to go through the stocks in the rotation this week that I'm setting up heading into Monday. Okay, setting up heading into Monday. Now, I want to give you my thought process first before we end up going into this list. We just built this big argument about this perfect tsunami, tech stocks near breakout levels, FOMC, Dow Theory, all these reasons, right? If it happens, I'm going to be aggressive. I'm going to be buying. I'm going to be buying with more share size. If it doesn't happen, I'll find some other opportunities. That's trading in the real world. Stop having those pity parties where you say, I don't get the breaks. It doesn't work out for me. I got news for you. It's like life. Everybody has problems. Everybody has things that doesn't work out. It's those that pick themselves back up and say, okay, that road didn't work. I'm going to try this road. Those are the people that see massive, massive success. So if you want to get to the next level in anything, whether it's trading, dieting, working out, or anything in life, accept the fact that there's going to be stuff that's going to knock you around. And it's those that dust it off and say, okay, I did what I was supposed to. That didn't work. I got feedback. Let me continue. So I'm telling you right now, I'm looking for that to unfold this week. If it does, perfect. If it doesn't, big deal. I'll look for other ideas. So I'm going to set you up right now with the ideas. And again, you could download this newsletter in the description below the video. And you can also find out about joining me this week and actually trading with me through all this volatility, because our boot camp actually starts today. You can get information about that below today as well. All right. So we already talked about the sector rotation heading into the week. Now I want to talk about how we're breaking down the week. Okay. So sector rotation. Let me actually make this a little bit bigger for you. Technology take the wheel. Apple and AMD. I just showed you those two charts. Apple and AMD scheduled to report this week. Apple broke out to a multi-month high. Here's the other one to have on your radar. And Micron finally getting through the 64 level that it's been. Look at this. Boom, 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 boom. Micron has at least $10 to go if it can finally get above and stay above 64. It was above it actually on Friday, closed above it. Now, here's the thing. It actually just rallied $6 into this level. So I've been looking to work my way up into a trade in Micron. The first piece above 64. The second piece looking for it to make a run up to 74. Okay, so Micron on the list this week as well. Microsoft reported and held the bid. So again, we're talking about not only last week's earnings in tech. Obviously, Microsoft reported and still holding the bid. Some minor resistance not too far over here. The next level in Microsoft is 340. So we're setting up a lot of two-step trades this week. And obviously Meta, oh my gosh, Meta's just been a bulldog since puking it up down here in the 80s. Another bullish gap, another close near the high. And again, if you kind of do your basic chart reading, we're kind of at this level right now where Meta's got some work to do. If it does, my word, the next move is all the way up here. That's actually where it closed. So that's technically the gap fill, not there, because that's actually where it started. So you got some room to go. It's got to get through this level first. Personally, again, this is the way I'd be walking everybody through this in the community right now. Some of these stocks have to pause a little bit before they take off to set up a better optimal entry. I love the bullish gap in Meta. I love the fact that it came back strong on Friday again. But I do think Meta needs to pause a little bit, maybe even for a week or two before looking for that next new swing trade. Okay. So again, it's not just about, did I pick the right side? Am I picking the right spot that justifies the risk in exchange for the likely profit potential? Remember, all three of those pieces have to be in a good trade, right? All right, so let's keep working our way through. NVIDIA actually was the big dog after AMD, and now this guy is kind of stuck in a trading range. So there's AMD, and here's NVIDIA. So you got some resistance here in NVIDIA, and you got 280 basically as the level. You got 280, 287, and then you got room to 340. So again, NVIDIA, also bullish, also near the breakout level, but also setting up a two-step trade. So think about what I'm telling you here. This is a really critical part of trading, not only mentally, but for your account. We're talking about two-step trades because stocks are at or near breakout levels or a little bit extended, right? But they also have resistance not too far away. Resistance, keep it simple. Where did sellers do something significant the last time? So we have a little bit of work to do. We have obvious stocks, optimal entries, but resistance just above. So you put those three pieces into the trade. That means we would not be going in full share size on our initial entry. We need to get through that level. So first piece to put it in your position summary. And again, first piece putting in your position summary means that it makes it easier to read the tape because you own the stock, which now you know that stock like the back of your hand because you have a little bit of position size. But then if it gets through that next level, that's where you look to start to add. It's just good money management. Every trade is not all in if there's resistance just above, but it's still a good idea. So again, NVIDIA qualifies in that scenario. Okay. All right. So working our way through communication services, obviously Meta with a big move. Now here's the interesting one in Google that I'm watching this week. Google, you can actually see, again, how many more we can look at this stock at or near a significant level that needs to get through. Look at how often this level right around 107, 108 is significant. Now we kind of zoom this out. The next level is up here. So we're looking at roughly a $12 move in Google if it could finally get above and punch through this level of 108. So we're kind of mapping that out right here, right? Sits near a breakout level, roughly $12 to $14 to the next level. Okay, that does not have a two-step trade. That is either a breakout and go, or a breakout fail, take the small loss and go to the next trade. Okay, healthcare put up some big numbers, and it's actually been, again, talking about rotating sectors, right? Healthcare has actually been on fire. One of the top ones that I like this week, heading into this week, is Cardinal Health. Cardinal Health finally got through this level. You can actually see 80, boom, 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 like 5 or 6 different times, couldn't get through there. Now, if we look at the big picture, next level up here is mid 90s, like 92 to 93. So Cardinal Health has roughly $10 to the next level. Okay. Working our way and continuing through the healthcare. You can download the list. Novartis actually had a big week. I believe it was last week and now, or the week before, and now is pausing. So again, talking about stocks that are at or near a good level to look to get in. You got a push and a pause, a push and a pause, a push and a pause. Now's the time to look for a new optimal entry because we've paused. All right. Consumer cyclical quoted bid, and the leading stock is Starbucks. Who would have guessed Starbucks would be the hottest stock for the last 10 days? Did you trade it? If the answer is yes, awesome. If you didn't, ask yourself why. It simply means that you need structure from day to day. The same way that we put this out every single night, you need a method of identifying which stocks have the strongest order flow in that moment. Then you break those stocks down by sector. You start to work through the sectors and you start to pay attention to where is money flowing on a moment by moment basis. This is what makes trading a heck of a lot easier to have conviction, because you have a process. The only thing we can't control is what happens after we have our best educated guess on follow through. All right. So Starbucks scheduled to report this week as well, 117 level. You can actually see that over here. So this is another two-step trade where we have the catalyst. Also, let's take this into consideration. This was a big resistance level. We blasted through that. But now Starbucks has 1, 2, 3, 4, 5, 6, 7 green days in a row into this pretty significant 117 level. So this would be a two-step trade for multiple reasons, not only because of the resistance, but because it's well beyond the optimal entry. Push and a pause, next trade, pause, next trade. This is probably going to follow through maybe 1 or 2 more days into earnings, and then it's got to work its way through that 117. So now the right stock versus the right moment versus the right position sizing. All of these pieces go into the type of trade. Okay. So working our way through, that's the two-step trade in Starbucks. A couple of footwear stocks made the list. Nike is not too far from the 130 breakout. SKX, got to like this one heading into Monday and heading into this week as well. Finally took off through that big breakout level, and look at the levels that we're at right now. It's got a little bit of minor resistance here, but if we kind of zoom our way out, another stock that's not too far from all-time highs. I can't believe how often over the last couple of weeks we're talking about stocks at or near all-time highs. Again, adding the breakout parade, we just talked about it. Eat, Yum, McDonald's, all strong right now. Industry groups, have you been watching the casino stocks? Again, not the most exciting stocks in the world, but let's take a look what the industry group is doing the same thing. LVS broke through resistance. Win, sitting right on the door. MGM sitting right on the door. And actually, if you read Investors Business Daily, DraftKings is actually the number 4 stock right now in IBD from this weekend. That's pretty interesting. We traded DraftKings a lot over here during the pandemic and a little bit more over here. It's been off our list for a while. Look at this level that it needs to get through and look at what it's been doing right now. Bullish U-turn into well bid into a breakout level. I'm going to tell you, I haven't traded in a while, but it's in my radar again. I have to do a little bit of research over the weekend. All right. Residential construction, make sure you have these lists in your watch list. DHI reported, KBH and Pulte Homes also up there. Not the most exciting stocks in the world, but again, slow, grinding, move higher. Isn't that what matters? DHI. Look at this move. Did you catch any of this move? How much more? Boom. boom, boom. All right, sideways finally broke out again, holding the bid for earnings. It's about having structure, and now we finally got through this level as well. All right, semiconductors, we just talked about AMD, Micron, and NVIDIA. All three of them should be interesting. However, this is where we start to get to the other side of the tape, right? Medical devices, this group of stocks actually looks pretty good right now as well. BSX and EW both broke out as well. Here's the other side of the tape, though. We want to go to it just in case the market does not catch a bid. And again, remember what I said over here, right here. I'd rather be prepared for an opportunity that never comes than be prepared when one does. Well, that's what industry group selection here has to do with. And if the market does not have the bullish follow through, then we need a list of stocks that we can short sell if the market starts to trade down. Now, you want stocks that already have bearish order flow heading into while those markets are breaking out, because that means that they're showing relative weakness. So software infrastructure, Palo Alto Networks, FTNT, CRWD, NET, Zscaler, and OKTA. All of those meet the list of bearish order flow showing relative weakness to the market taking off. So if our best laid plans, our best arguments, our best trading game plan does not follow through, I'm expecting it to, and those trades that we take don't take off, I want to be prepared on the other side of the market. They could be a hedge if the market does take off, or they could just be straight up short sales if earnings don't come out good this week. If the Fed doesn't let the market know what it wants to hear, then those ideas will be in my game plan already now, Monday morning, before the market even opens. I have a list of stocks as potential short selling. Now, PANW, Palo Alto, and a few of those stocks, they were really bullish about a month ago. But here's the thing. The tape changed. When you read the tape, you start getting better at saying, is it obvious and is it still valid? Those stocks were very bullish. And let me just give you a PANW as an example, Palo Alto, and I'm going to throw the 50-period moving average in here just to really bring this point home. Earnings came out and the stock was fantastic. We had this big move prior to. Look at how clean, push and a pause, a push and a pause, a push and a pause. Earnings sideways, nice move. But now the stock is now 4 days after this bearish gap, bearish gap, bearish gap below the 50-period moving average. So the tape has changed. That's a last piece of the puzzle that a lot of people are missing. First is order flow stacking, which is recognizing when real money is being committed to an idea and how long that's happening. Tape reading, which is what we're talking about right now, is that idea still valid in the context of the longer term order flow? And then the last piece that you put into that is, okay, great, I got a good idea. How and when do I hold it longer, which is the profit maximizer? Order flow, tape reading, profit maximizer. Those are the three pieces that will completely change the way you look at the market. All right. That's everything we got here for today. Make sure you click down, and we're setting up the entire week. Click down, get your copy of this. You can download it. The daily ticker is below in the description. If you want to trade with me through all this volatility, the FOMC this week and all these earnings, click down in there as well. I'd love to see you in the boot camp. It starts today. All right. Have an awesome day, everybody. I will speak to you soon. Thank you so much for spending time with me today.